Hello, my name's Craig Earlham, Senior Market Analyst at Oanda, and today we're going to talk about gold. Now, we've seen a lot of movement in gold recently. It's been attracting a lot of attention. There's been a number of different factors really moving the yellow metal. Of course, the US dollar is a primary factor here. Gold is priced in dollars, so when the dollar appreciates, that tends to be detrimental for the price of gold because it becomes more expensive to non-dollar buyers and vice versa. Well, what we've seen more recently is we've seen a little bit of softness in the US dollar following what had been quite a strong rally. Gold was looking vulnerable during that dollar rally, so the weakness that we've seen in the last few days is providing some support. It's been enough to take us from those kind of 1180 levels, 1280 levels, back above $1,300. Now, whether this can hold is another question altogether. People may look at the $1,300, see it as a big psychological level. But we've crossed this threshold on numerous occasions over the last few months, so I do think it holds a little bit less substance than it has before. For me, the two key levels here are 1280 to the downside, where we've found support on numerous occasions. A break of here, I think, could be a very bearish signal in the near term for gold, and above that kind of 1320, 1325 level, the most recent resistance level. The reason why this is so important is not because if we break above here, it's necessarily an extremely bullish signal. It's what we can read into it if it fails to break above here. If we fall short of this 1325, then we're starting a series of lower highs. We've made one lower high already, but another one suggests there's downside pressure building because rallies are being sold into earlier. So from a purely technical perspective, that is a bearish signal, and especially when we've got this flat bottom like we have at 1280, that suggests that the bears are taking control, and while the bulls around those 1280 levels are showing some resilience, then if pressure continues to build and we continue to consolidate into those levels, then the potential for the bulls to give way is greater than the bears at that stage, or at least that's what the textbooks would tell us. And should we see a break of these 1280, then what we've seen previously is that gold tends to move in these kind of $20 clips, or has done certainly over the last number of months. So 1260 is the next notable level of potential support below here, having been a notable level of support and resistance previously, and below here again 1240. Again, 1260 is the next level of support, but I think 1280 is such a significant level for me at this moment in time. A move back towards the kind of 1240s, even 1220s, wouldn't necessarily come as a major surprise. In terms of the longer term picture, I don't think, but when we're looking at the greenback, people have been calling for some weakness for some time, and with the Fed becoming more dovish, you would have expected that to potentially materialise back by now. The thing that's kept it supported is the fact that other currencies have just been that much weaker. Can we expect that to continue for the rest of the year, or has the dollar almost seen the best of its days for now, and is that weakness just delayed rather than put off altogether? I think it's probably delayed, so I think the bullish case for gold in the longer term is potentially still there, but at this moment in time, the chart for the LML is still looking a little soft and suggests we could see some weakness, a corrective move of that longer term bull rally, as long as we see a break of that 1280.